What's going on YouTube, and welcome to Make Your Own Luck Mondays. And again, this is a web series that I've been doing on my Instagram page and just recently moved it over here to YouTube. And my whole process is I'm a regular dude. I'm not some finance guru, and I just take topics and I try to break them down and make them palatable and easy to understand. And that's how I learn. So hopefully I can do that for you guys. And today we're going to talk about credit scores. We're going to talk about FICO scores, and more importantly, what that means kind of post COVID-19 as we get through the pandemic, and what banks will be doing and who they're going to be looking at. And very, very important numbers are going to be the 3 digits that are your FICO score. So I figure I'd go through that a little bit just so you understand it. And this is kind of my barometer for people when I'm chatting about personal finance or, asking them questions. I'll always say, hey man, what's your credit score? And if the answer is I think it's 7 something, that tells me everything I need to know about them and where they're at in personal finance. Because if you don't know your credit score within 10 points, you basically have zero interest and you're kind of cruising along through your financial life of sorts. But that's every single time I hear somebody and they're like, yeah, I'm 7 something, and come to find out, you dive into it, they go on Credit Karma or whatever and find out their score, and they find out it's 6 something, or they find out it's better. But typically it's not. When people are wishy-washy about understanding their credit score, it's normally lower than what they think it is. And right now, more than ever, it's going to be super important to figure out how to get that credit score up, how to get it up above 750. And if you can get it into the 800 range, which is basically the holy grail of credit, is getting it into the 800s. Super hard to do. My credit score right now is sitting at 798 and 799 from Experian and Equifax, and it does creep over into the 8s once in a while, and it also creeps down into about the 790, 780 range, and it's all based on my credit card utilization as it goes up and down. But there's basically 4 areas when you're talking about credit and your FICO score. It's looked at in 4 different ways. It's looked at from your payment history. That's 35% of your score, so it's super important, and all that really means is you make your payments on time. You don't miss payments. If you're always making the minimum payments at least, hopefully you're paying stuff off at the end of every month. But your payment history is super important. So that's number 1. Your credit utilization. So this is kind of your exposure. This is how much credit you have and versus how much you're using. So they basically say, hey, if you're using 60% of your credit amount, that's not good, and that's going to actually affect you negatively. So you want to be using less than 10% of your credit utilization. And really what that means is you want to try your hardest to get as much credit as possible. So you can make calls to your credit card companies and whatnot to try and see if they'll up your limits, and you can do this, every 6 months or whatever you see fit. But you basically want to get more credit so that you can use a little bit more, but you want to try to keep it within that 10% range. So those are the 2. And then the third is going to be the length of your credit history. So this one is important because it is an average. So if you have a super old account that you've had forever, that's going to help you a ton. But if you open a brand new one, now it's going to average out, and actually your length of credit history is going to be a little bit shorter. So you want to make sure the biggest thing with the length of your credit history is if you have old accounts, old credit cards that you really don't use anymore, you want to try to keep those active. You want to keep them in good standing. You want to keep them active. Even if you don't use them, keep them in good standing because they really, really help out a ton as far as the length of time that you've had your credit. And then the 4th one is really just the amount of lines of credit you have. And it's funny, when you look at Credit Karma and whatnot, there's 21 plus lines of credit is actually the best category you can be in. So that takes a lot of time. That's not going to happen overnight. And you want to start early in life with starting to build credit and whatnot. But having 21 plus lines of credit is something that's going to take a while, because you don't want to just go out and apply for a bunch of different credit cards all the time, because what that does is it does a hard inquiry, and you don't want to have those are negatively affected on your account. You really only want to have a couple of hard inquiries a year, And so this is going to have, a lot of length of time that it's going to take for you to get the maximum amount of lines of credit, but it's only like 10% of your overall score or whatnot. So when you're talking about scores, you're basically talking about getting into the high 700s to be in a great spot, and that's considered excellent credit. So I think it's anything over 750 or something like that. And there's a couple of misnomers when people are talking about, their credit and looking at it and whatnot. And there's the difference between what I was just saying, the hard inquiry, when, you're going out to get a loan for a car or whatever, and, they're going to pull your credit. So that's actually going to ding your credit. So you want to reduce the amount of times you do that, or the amount of times you apply for a credit card, like I was saying. But on the other side, there's the soft pulls. So when you sign up for Credit Karma or one of these companies that'll show you your FICO score on the regular, that's a soft inquiry. So that actually doesn't affect your credit at all. You can check your credit score on Credit Karma all the time and it does nothing. And it's good for you to know. It's good for you to know where you're at, what's going on with those 4 areas, and it'll help a ton. The other one that's a misnomer that people seem to have is that you need to carry a small balance on your credit cards for them to show as active and whatnot, and that's complete garbage. If you have a credit card and you pay it off every single month, that is the best way to go, because you're basically showing less utilization, and the utilization part is like 30% of your overall score. So that's a misnomer as well. And then the other one is when you're looking for things like mortgages and whatnot, they want you to shop around for mortgages. So if you're within a specific time period of looking, at different lenders and whatnot, you can have them all pull your credit from all the different lenders in a specific time period, 5, 6 different lenders, whatever it is, and it'll all just be one big hard inquiry instead of all these, 5 different hard inquiries as well. So that's basically kind of how it all works. And what I was saying before about how important it is to get your credit to a spot where it's, high in those high 700s to, getting up into the 800 range. As we move forward, banks, all the stimulus we've done, all the different things we've done to stimulate the economy and lend out money and do some of these, PPP loans for small businesses and the SBA stuff. At the end of the day, it's going to affect every single person at some point, because banks are now going to be looking at the best and the highest credit folks to lend money out to. So you want to get yourself into a great position. If you're looking at some point here to save some money, to buckle down, and your goal is to buy a house, and you want to save that 20% and get it going, or maybe save a little bit less for an FHA loan versus a conventional loan, you're still going to have to be in a position where your credit is in impeccable shape to get a loan, because it's going to be a lot harder to get money. For the past bunch of years, money's come pretty cheap. Interest rates are really low. But right now, we're in a situation where they're going to tighten the belts for sure. So you want to be in the best position to have yourself obviously in the best spot to get the best interest rates. The lower the better, so you're not paying more over time, and obviously be able to get as much money as you need for whatever you're trying to purchase in the future. So hopefully that helps out here for this week as we look at credit scores and trying to simplify it a little bit. Hopefully that helps out a little bit, and we will see you guys next week right here on YouTube. Please subscribe to my channel. I'm trying to get to 1,000 subscribers. That's my first kind of goal, as I launched last week. This is my second week on YouTube, so if you could like my video here and subscribe, that would be amazing. Thank you guys so much. We'll see you next week.